So I think a lot of what GM is saying today is things that they control as opposed to a bullish call on the environment. I think the biggest surprise probably to investors, and we're very pleased with their announcement today, is the amount of savings that they're able to get from the restructuring actions they announced recently, including closing 4 plants in North America. That's a huge contribution to 2019. I think this is what investors have been underestimated. It's also the contribution from their new trucks, the full-size pickups, which are rolling out in dealerships as we speak. So a lot of the things that they're doing rather than an actual call. If you look at their assumptions in terms of the market, they're calling for flat US, flat China. Might be a little bit on the optimistic side, and you're going to get some knocks from the bears today on bullish assumption. But honestly, this is things that GM control, and it's actually extremely impressive.
Do you think, Phil asked the question, of course, and made the point, stock hasn't done anything in 5 years. Does the multiple actually move up at any point, or is this simply about continuing to mine the margin there and increase that as a way to get earnings up?
So yeah, so it's an interesting question. I think I would first point that in 2018, this was the best performing stock of autos. Now, obviously within some 60–80% declines, Ford down way more, but GM still. So investors are noticing GM's actions. I think that's certainly a fact. In terms of when will the stock actually re-rate in absolute terms, some investors say, look, we want to see how they perform during a downturn. Well, the beauty of what GM is essentially quantifying today is that by unlocking $6 billion of free cash flow from these cost savings action and from being more efficient, these guys will be able to generate free cash flow even during a fairly pronounced downturn. If it's what it takes, this is what it takes, but it will show investors that it will actually keep generating money and positive earnings even in a very big downturn, and that's a result of the action that it's taking today. So we're fairly happy with GM's outlook. We feel that they're essentially pointing the way for the next few years where they will offset a lot of the macro and industry pressure through internal actions and product.
So you're a buyer of the stock. I mean, it's interesting. It seems like the market has sniffed this out a little bit. It was actually outperforming as we entered this sort of upswing in the beginning of 2019 after way underperforming in 2018. Where does that leave the valuation?
So there's been a lot of debate going to this investor day. There was investors we've spoken to were 50-50 between is it going to be a cautious day because of some of the political scrutiny around GM, will the outlook be cautious, will it be bullish? It ended up being very, very bullish. GM is still incredibly cheap. We're talking about something around the range of 3 times EBITDA. The things that it can do to sort of improve that over time, obviously the earnings are growing a lot. You're seeing a little bit in 2019. You're going to see significantly more in 2020, 21 when they have the full restructuring benefit. The other thing is, and Phil mentioned that before, a potential monetization of Cruise would essentially force the market to attribute value to this autonomous driving piece of GM, which currently is not really well reflected in the stock price.